Further ado, thank you for joining me for our new installment, Building on the Budget Live with America's Home Place at IGTV. I'm your host this week, Lowell Pennock, General Manager out of the Alvin location, and I'm here with a special guest. Her name is Elizabeth Rasak. She's a mortgage banker with Cente Mortgage. Elizabeth is one of our preferred lenders, and she will be talking to you or answering your questions regarding new home financing and all the nuances thereof that's associated with obtaining a construction to perm mortgage loan. Hang on just a second. House is coming along great. I'm stoked. Hey, man, I'm stoked for you too, David. It is fantastic. But before we get started with this installment with your lending questions, I want Elizabeth to tell you a little bit more about who she is, how long she's been in the loan originating industry, and why choosing a preferred lender is critically important in the process or the journey of building your new forever home on your property. Hang on just a second, Elizabeth, while I flip this camera around, okay? Are you ready?
I am.
Okay. All right, guys, without further ado, Miss Elizabeth Rasak. All right, you're on.
Hi, I'm Elizabeth Rasak. I'm with Cente Mortgage. I've been in lending for the past 15 years, not only as an originator, but also an underwriter. One of the things that really is rewarding about construction financing is that you get to see a family's dream home come to fruition, and that's really why we've specialized in construction on your lot. As Lowell pointed out, it is very important to use a preferred lender. Construction is quite different from just purchasing a home. There's multiple steps involved, and because there is different factors that go into the process, having a lender who's intimately familiar not only with your building team but with construction guidelines is going to help ensure that you get the best overall culmination of everyone's efforts and a smooth process and the best customer service. You'll want to use a preferred lender because they'll be able to put you in the best loan product that's going to work well for you and your builder. And Lowell, I'll hand it back over to you.
All right, guys. Come on with, man, that was fantastic.
Thank you.
That was fantastic. Thank you, Elizabeth. Hang on just a second, guys. Right now, guys, I need you to start sending your questions our way. I'm pretty certain that there's probably not many questions Miss Elizabeth is not going to be able to answer for you. Lending is a big part of this process. In fact, for most people, it's how the process begins.
It is.
And in some cases, obviously ends. So it's a combination of both. So anyway, hang on just a second. And if I don't have any questions, I'm just going to start making up some questions for you, Elizabeth, because some people probably don't know what questions to ask, and that's fine. I didn't know either when I started in this industry some 20 years ago. So I'm going to circle back real quickly to see if there's any question on the board that I may have missed. And please feel free to start sending them our way. And if not, I'll just start throwing some questions out there regarding construction financing. Hang on just a second. I'm going to flip this camera around. We're going to do our first question. Elizabeth, you've been in the industry for 15 plus years, and I know you've underwritten a lot of loans and met with a lot of people. What's the biggest fear most people have when they initiate a conversation with you regarding financing, construction financing in particular?
Typically, it's the fact that it's such a large investment and they're just unfamiliar with the process, and I think that leads to a lot of anxiety. So one of the things that we like to address is really how the entire process comes together. And one of the best things that we do is just walk an individual through when we're starting off. And so the first step in the process is going to be the qualification. You want to see how much you qualify for. You want to get a look at what your expected monthly payment will be. That way you know, is it something that you feel comfortable with, the numbers that you're looking at, what's your maximum so you know how to stay within budget, and then you can play with numbers from there to get to maybe a monthly payment that works best for you and your family. Then you'll meet with your builder and start discussing house plans, different things that you'd like to go into the home. And then what your builder does is to provide us a copy of not only the house plans that have been modified to suit you, but the specifications for what's going to go into your home. And then the next big milestone will actually be the appraisal. And that information is turned into the appraiser, and he's going to do an appraisal report as though the home were already completed. This is going to give us a market value for what your home will be worth once it's done. And that's going to help with the financing because your home is really kind of the collateral for the loan. Once we have the appraisal, that's typically the last step for the final approval.
Can I pause you for a minute? A lot of people, and I've heard this many times regarding, and there's been some confusion regarding collateralization, how that works. Some people think it's in lieu of down payment. Some people think that down payment reduces the overall purchase price for the builder. Can you explain a little bit more in detail how the collateralization aspect of their property works in the construction financing?
Sure. So the property as collateral just means that the property is going to be liened when you get the construction loan. So if you own it outright, whatever the value of your land is, that will be what is your equity position. And depending upon the type of construction loan you have, determines how much equity you actually need. It can range between 3.5% to 10% as far as the equity required. So for instance, if you were going to get a $200,000 construction loan and you needed 10% equity, your land would need to be valued at least $20,000 in order to meet that requirement. Now, if you own the land already, that doesn't reduce the loan amount that you need. If your home costs $200,000 to build, then your builder is still going to need access to $200,000. But what it does is to satisfy not needing a down payment where you would need to actually put up cash for $20,000 in this example.
Okay, great. Okay, thank you. Hang on. We have a question from Carolina, Edge 34. Do you have or can you find land as well? Lenders don't necessarily actually help procure land or help locate land, but if you can contact, I don't know where you're planning on building, Carolina. Again, americashomeplace.com, punch in your zip code and it'll get you to the nearest location, and they can help fill you in on what parties can actually help you. And can we help you as a builder? Absolutely, but they'll give you a little bit more detailed information regarding that. And there's another question. What do your credit scores need to be? This is from Chris Matisse. Elizabeth.
So typically the minimum credit score is going to be a 620. Since construction is considered to be a little higher risk simply because there's the period where they're actually building the home where, something could happen if you decided you didn't want to complete the project. And so for financing purposes, they would really like to see maybe a 640 up to a 660, but 620 would be the minimum credit score required.
Okay, great question. Now, let me ask you this. Another question from Chris Matisse. How much money do they need with respect to a construction loan? And I think that's just a general question.
So for a construction loan, what's required is most of the time a 10% equity position, which would mean kind of a 10% down payment if you were going to buy your land and do the construction at the same time. So you would add the cost of the land plus the cost of construction, and then you'd need 10% of that. As far as what you need to have over and above that, an underwriter is going to want to see that you're able to pay your monthly bills with the money that you have left over. So generally, they'd like to see about 2 months worth of cash on hand to be able to cover your outstanding bills.
Very good, very good. Thank you, Elizabeth. We got another question coming in from solo.nvestr. The question is, they have a good amount of reserve funds to help with financing, and with a good amount of reserve, could that help someone who doesn't have the credit score necessary that most lenders look for on the front end?
So it's not going to change the fact that the 620 is going to be the minimum required. However, if you're on the lower side, maybe right at 620, then those factors are going to be what are called compensating factors, which are going to add to the likelihood of your approval. The only reason why it's kind of a hard stop on a 620 is that's really the base loan amount for conventional financing for a mortgage. And so when you have additional funds on hand, or if you've got a long time on your job, those are considered to be compensating factors if maybe there's an issue with something else, lower credit score, maybe limited reserves. They're going to want to see, financial responsibility and stability in your employment.
Okay, good. Thank you so much, Elizabeth. We have another one from Carolina Edge 34, which is a pretty good question. Do you do VA loans?
So,
and let's talk about it from a grandiose point of view, because you're licensed in how many states?
I'm personally licensed in 3 states. My company's licensed in 6. I know America's Home Place has a larger footprint than what we cover. But, America's Home Place is familiar, and they are an approved builder with the Veterans Administration. And we've worked on VA loans with America's Home Place before. We do them. And it really depends on kind of your personal situation, whether or not you would have a VA one-time close, or if it would be better suited to just do an interim construction loan and then have VA for your mortgage. But you can certainly reap the benefits of a VA loan in either situation.
Very good. Thank you, Elizabeth. And again, I want to remind you that your nearest location is found on our website at www.americashomeplace.com. Punch in that zip code. It'll pull up the office nearest your building site. And I can guarantee you one thing. You're going to get the same professional advice in terms of construction finances from one of our lending partners in our other locations as well. The next question is from Derek_Carter, number 8. Fixed or variable rates?
That is an excellent question. So you'll find that with construction loans, they're most of the time going to have a variable rate. And the reason why is because it's considered to be a short-term commercial loan. And what that means is that there are funds available that act like a line of credit from which your builder will take draws. And since it's set up that way, a commercial loan is typically tied to Wall Street Journal Prime. So your interest rate, for the most part during construction, is going to be Wall Street Journal Prime plus a half or plus 1. But once the house is completed, you're going to convert into a 30-year fixed rate mortgage. So, for instance, with good credit and a good loan to value, the interest rates are in the low 4s right now, and you would have that fixed for 30 years.
Wow. Can you, and I have another question from Chris Matisse, but I want to pause just before we get to that question, Chris, and can you explain to our viewers, and if you guys got people that are in the market for a builder, share this information, get them on this IGTV installment so that they can learn more about what it takes to get financing complete in their new home purchase as well. So, but can you explain to them a little bit more about loan to value? A lot of people don't even know what that means. It sounds kind of foreign, if you will.
Sure. So as we talked about an appraisal gives a market value for what your property will be worth once the house is done. So loan to value is really the comparison of your loan amount versus the amount that it's valued at. And so when we talk about a 90% loan to value, what that really means is that your loan amount is no more than 90% of what your home is worth. And so that's how they determine loan to value. You take the loan amount and you divide it by the appraised value to get the loan to value.
Very well said and interpreted. Chris, we're back at your question. How do I know, her question is, how do I know what I budget for? What's my budget? How do I know my budget?
Well, that's where the qualification comes into play. So what we would do would be to look at your gross income and then also your current debt load. And that's really going to be what's reported on your credit report. And so it's going to be, if you have any car notes, student loans, credit cards, they're going to look at your monthly payments for that. And then they're also going to look at what the proposed monthly payment would be for your new home. And they want to make sure that all of those payments added together are no more than 45% of your gross income. And we say gross because it can make a big difference, your take-home pay versus the gross income, and that gives you more room in budgeting by using that gross figure.
Wow, very good, very good. Come on, guys, send your questions. Send your questions. I hope the weather's doing better in your town as compared to what we're getting ready to experience here in Alvin, Texas. But we're still here live, ready to answer all your lending questions regarding construction financing. Guys, I'm just waving at you. Hang on. All right, Derek, again, does loan start when you move in or the first day of construction? That's a good question, Derek.
That is a good question. So it's going to start, because this is a Build on Your Lot program, this is going to be your house right when they start. And so what that means is that the construction loan will be in place prior to the builder breaking ground. And so you would close into the construction loan. The builder can start the next day if they're through the permitting process. And then for America's Home Place, generally, they run weather dependent always, as we can see outside, about 6 months to completion. At that point, you would convert into the mortgage, you would move into the home, and it would be just like as though you had bought the home before, once all of that's taken place.
All right. Well, hopefully, Mr. Edwards, excuse me. I tell you, I'm going to butcher your names. Hopefully that answers your question too regarding the construction payment, when it's going to be due, when construction begins or once it's completed. So continue to send your questions. You're welcome.
Well, we might want to add on to that.
Please, come on.
So during construction, you're going to pay a monthly payment, but it's just going to be based off of the funds that the builders use so far. So, for instance, if your builder has taken only the slab draw and your slab's $30,000, you're going to pay just interest on that amount. So, in this example, your monthly payment would be $150. At the point that they take the next draw, then your monthly payment would go up slightly because now the construction loan balance has increased. But it's interest only on funds drawn, and you pay it just once a month, just like a normal payment. And then at the end, you'll convert into a fully amortizing payment where you pay principal and interest along with your property taxes and insurance.
And that answers your question, and to your comment, Derek_Carter, nice to know, fixed 30 years or, after you move in. So absolutely.
Yes.
Okay. How long does it take the process from getting the loan and to move in? And I think she kind of answered that question a little bit, but let's talk about how long does it take, at least because every office is going to be a little bit different, slightly different. Elizabeth is going to speak to her experience working with the Alvin location, but on average, because you've done a lot of loans for the Alvin team, and getting ready to start doing some loans for the Conroe team. But how long has it taken you to actually, from the initial conversation with the prospective borrower to actually closing on the CLC, closing that construction loan to begin the process? And then I'll take the question from once the construction loan is closed to turning those keys over and settling with the home buyer.
So with the Alvin office, as Lowell's mentioned, we've done a lot of loans together. The process is going to take at a minimum 30 days, And it really depends a lot on you as well, because if you turn in your information timely, if you're able to come in and do your color selection meeting to select the items to go into your home, and all of that happens in lockstep, we can close within 30 days. If for some reason maybe you haven't filed your tax return yet, you want to go ahead and do that, then it may extend that time period out. Average, I would say, between 30 and 45 days. And again, it really depends on kind of your timeline. You're also in the driver's seat.
So I'm gonna flip this camera on real quick, Elizabeth, so you can relax just a little bit. From the time it starts, from the time you get the keys, from the time that we actually, Elizabeth and a team like Elizabeth actually close on your construction loan, it just depends on weather. In barn weather, we typically like to get our homes completed at least in my office within 150 days post a slab pour. But again, every office is going to be different, so I definitely recommend that you punch in your zip code. If you have not located the office nearest your building site, get with one of those building consultants or the general manager, and I guarantee you one thing, they'll to answer that question more in detail pursuant to your unique situation. So hang on just a second. Keep sending your questions, guys. Send your questions. I'm getting ready to turn it back over to you. All right. Doing some waves, doing some waves, doing some waves, doing some waves. Great questions, by the way, guys. You guys are astute students. We really appreciate it. All right, Derek. See you later, buddy. Derek had to go. So AMOUR is closing tomorrow. Well, congratulations. And welcome to the AHP family. All right, I'm going to do some fill-in. I wait for some more questions to come in, guys. I'm going to try this, and I don't know how this is going to work, but I'm going to try this. Again, this is organic. So Amori sent a request to be in your live video. Amori, I don't know how to do that. I'm just going to be straight up honest with you. But if you have any questions, let me know. That's one I've not received. This is only our third installment, so forgive me if I didn't answer your question in its entirety. And then something else just popped up here. Hang on, guys. All right, I'm back. Okay. All right. Elizabeth, let's talk a little bit more about construction financing and some of the do's and some of the don'ts once your loan has been approved to close.
Well, so I would say the biggest one is please don't quit your job without maybe having one lined up.
Can you tell them why, though?
Well, so your income, as we talked about, is used in the qualifying for your construction loan, and so based off of the information that we have at that time. And so what you really want to make sure is that your personal circumstances really haven't changed that much. So what I always advise my clients to do is if something comes up, or if you're thinking about making a large purchase, if you need a new car, if you've got to do something, that just give us a call. Let us run the numbers. Let us give you need some direction on what you want to do. We're here to help, and really that's what I tell people. We are with you every step of the way. So if there's anything you need, pick up the phone. And America's Home Place is exactly the same way. It's kind of a family environment. We are here to help and want to make this the best possible experience for you.
Very good response, Elizabeth. Very good. We have another question coming in. Can a structured settlement be considered income? It's a good question.
That's an excellent question. Yes. So you would have to have all of the documentation regarding the structured settlement. You would have to show that you were going to continue to receive the payments for 3 years post-closing. But it's a form of income, and so it certainly can be used. It would just need to be fully documented.
So hopefully, Solo, that answers your question. Just documentation and a 3-year continuance, correct?
That's correct.
Okay.
And that's the case with most kind of different forms of income. As long as you can prove that there's going to be a continuation, then it can be used.
Okay. Because of America's Home Place's footprint in the industry, can you explain to our viewers? Right now, we got 12 guys. If anybody is in your clique that's looking to build on their lot, share this broadcast. Let them join on and ask their questions as well. But because we have such a large footprint, can you kind of, in a generalization or generalized kind of way, explain to them the different, and being an underwriter yourself, the different underwriting criteria that most people look for?
Well, they're kind of the
or
same.
Most underwriters, what they're looking at when they're looking at a financial statement, that kind of thing.
Right. So they're pretty much going to be the same across the board. If y'all have heard of Fannie Mae or Freddie Mac, they pretty much make all of the rules that everyone from a national standpoint has to abide by. And so there are certain things that they look. We touched upon the credit score of a 620. They're going to want to make sure that your debt to income ratio is around that 45% mark or less. They're going to want to make sure that you have enough cash on hand to make your payment. And then they're going to want to see continuity of income. And that's why they're, just as with the structured settlement, they're going to want to make sure it continues for a period of 3 years. If you're self-employed, they're going to look at 2 years of your tax returns. They're going to average what you've reported. And I'm just going to throw this out there because I understand with self-employed individuals, having to pay self-employed tax, it's difficult. But they're only going to be able to use what you actually report to Uncle Sam.
Can you break that down?
Sure.
Break that down, what they report to Uncle Sam.
Well, so for instance, if you have, if you're a sole proprietor and you report your income on a personal tax return, they're going to look at what you report on your Schedule C. And so whatever the net income is, they're going to average it for the past 2 years, and they're going to use that for your qualifying income. Now, if you've got non-cash expenses like depreciation, we even do our best to get everybody as much as they can, and we add back the depreciation portion of the mileage deduction. But that's really what they're going to be looking at. If you file a corporate return, they're going to take 2 years of your corporate return, again, add back non-cash expenses, and take the average income. For those of you who are hourly, they're going to look at, continuity of your overtime. They're going to average that. If you have bonus or commission income, you're also going to be looking at a 2-year average. If for some reason it's declining, they're going to use only the past 12 months. And so sometimes this can be factored into your decision-making process about when you actually decide you're ready to pull the trigger. Sometimes we help people with advising, especially for self-employed persons. You need to show this much income, and maybe they don't take all of the deductions that they had previously because they do want to show more income because they'd like to qualify for more. And so that's why this is an integral part of the construction process, because you want to make sure that what you qualify for lines up with what you want to build.
Great response, Elizabeth, and great question. Solo, you have one more question. Go ahead and shoot. Solo.Nevester, I believe, if I'm enunciating that correctly. You have one more question? We're waiting for that question because we're getting ready to close this installment down here in about maybe 2 to 3 minutes. We really appreciate you guys joining this installment, Building on the Budget with America's Home Place, live on IGTV. And you guys asked some fantastic questions regarding construction financing.
I did want to throw out something.
Please.
While we're kind of waiting on some additional questions. This is a question that I get a lot. So if you already own your land, but there's a loan on it, a lot of people wonder if it has to be paid off or if you can go ahead and get a construction loan even though you have a lot or a land loan. And the answer to that is yes. So what happens is the construction loan will actually pay off that land loan so that you end up with only one note. But you don't have to own your land outright in order to get financing. So that's something that comes up that I thought we might throw out there.
Cool. Thank you for that. That preemptive suggestion, not even suggestion, but comment. Solo says that he had an accident. He's going to be out of work for about 3 years. By the time he gets ready to pull the trigger, will he be able to pull the trigger?
That's going to be a qualified answer. So if you're going to be out of work, if you are receiving disability income, again, as long as you can prove that you're going to be receiving it for that 3-year period, then you can use the disability income that you would be receiving to qualify. If for some reason you are not, then you may want to look at different avenues. Some of the things that we do for retired individuals, for instance, they may not necessarily have an income stream, but they have retirement accounts. There's a way that we can actually use those accounts as though they were being liquidated and show how much of an income stream a person could receive off of those accounts. So there are different things to do, and that's why it's so important to talk to your lender to let them know what your personal circumstances are so that we can find the best fit for you.
Which reminds me, thank you, Elizabeth. If you want to speak to the preferred lender that's nearest your building site at the office that's going to be servicing your new forever home build, go to our website, www.americashomeplace.com, punch in that zip code, and get the contact information, man, and just get educated. Great question, though. We have one more question. If you own a home and don't plan on, great question, from the completion.
Well, not sold your home, you would have to qualify with both payments. So it's going to be factored in. One thing that we do is if that doesn't quite work for you, we can go ahead and go down the construction loan process while you're waiting for your home to be sold, get an approval based off of you having sold it, and then as soon as it's sold, you can close into the construction loan. But that payment would be included in your debt-to-income ratio.
Calculations. Very good, Elizabeth. And Solo says thank you. He understands. All right, guys. Well, I'm getting ready to close out on this installment of Building on the Budget live with America's Home Place on IGTV. It's been fantastic. I really appreciate you guys joining on. We're going to try to continue this thread, if you will, every 2 weeks. We're going to bring different people to you. Our goal is to educate you and to get you into one of our in front of one of our building consultants so that they can sit down with you, discuss your situation more in detail, and propose the right solution for your housing investment. It's been a pleasure. Thank you, Elizabeth.
Thank you.
It's been a pleasure joining you guys this afternoon. Have a great day. Again, that website is www.americashomeplace.com. Punch in your zip code and get connected today. Take care, and I'll see you on the next broadcast.